Tom Lee just released a new video here on Fundstrat Capital. 3 signals confirming high probability that the bottom is in. Stocks set to lead. Let's go ahead and take a listen here.
Hi there, this is Tom Lee. I'm the Chief Investment Officer of Fundstrat Capital and the Portfolio Manager of Fundstrat's U.S. Large Cap Granny Shots ETF. This is our update for the week of April 18th. I want to cover some particulars before talking about the Granny Shots ETF. As of April 17th, the price was $17.46, net asset value $17.47, and total assets of $826 million. For the past week through April 17th, Granny Shots had fallen 1.13% compared to the S&P declining 1.49%, or relative outperformance of roughly 36 basis points. Now, as has been the case for the last few weeks, I wanted to start this by talking about the macro, and markets have been turbulent since April 2nd. We know why. It's Tariff Liberation Day. It has caused a lot of turmoil and anxiety and uncertainty, and it, of course, is the worst macro period for markets, and at least from in my 30 years that I've ever seen. It's worse than COVID. And in our videos that we've published over the last few weeks, we've decided to orient some of the conversations to macro because correlations between all the stocks has risen so much. But our message has been the same, that the macro has gotten messy, but the economy does not appear to be unraveling, and therefore we don't think you should get too bearish. For instance, 4 weeks ago, we said there's a lot of dry powder that's capable of fueling a V-shaped stock rally. 2 weeks ago, we talked about how Tariff Liberation Day is a macro negative, but there was a probability of new trade deals coming. And last week, we talked about how markets very likely made their structural low last week, which was last week, or 2 weeks ago, because it was last week, and that we saw risk reward in Nvidia and Tesla, and of course, the fact that the VIX had fallen. So we're still through this period of turbulence, but because of developments this week, I believe that this is all resolved in a positive direction for stocks. So let me explain. There has been this conflict because the macro remains uncertain. If you're only focused on macro, you'd be nervous for these reasons I'm listing here. But if you looked at the equity markets, these things would get you quite constructive. And so this was the battle that had been taking place for the last few weeks between the stock market internals and the macro outlook. If you're macro, you might say we're facing economic Armageddon. That's something that Bridgewater has talked about, a different world order. Some people talk about the end of American exceptionalism. Others say that the top is in for the US stock market, similar to Japan in 1989. And of course, there's many people telling you that you should only be in gold and muni bonds. And gold, of course, is doing great, up 26%. It's the best since 2010. And of course, many people think there's opportunities in muni bonds. But the story of the equity market has been different. There's been pervasive bearish sentiment. You know, the AAII percentage of bears has been over 50% for 9 weeks. And the internal low was registered. We talked about that when you look at the VIX, that a VIX going over 50 and falling below 31 has always marked an internal low. And then later in this video, I'm going to talk about the 4 signs that a bottom is in. But at the end of the day, I think the equity market got this right, and it's resolving. Things are now resolving positively for stocks. So what are these signs of a bottom? Well, there's 4 of them, but I'm not going to take it in chronological order. I'm going to start with what was triggered this week on April 24th, which is this Zweig breadth thrust. Now, you're wondering, what is a breadth thrust? It's developed by Marty Zweig. It looks at a 10-day moving average of advancing versus declining issues. And the idea is when it goes from oversold, a reading below 0.4, and then back to 0.615 over 10 days, that's a bullish reversal. That has happened 11 times since 1978. And notably, 1 month, 6 months, and 12 months later, stock stock markets are always up. And this was triggered on April 24th, which was Thursday. On Wednesday, April 23rd, the high yield market options adjusted spread recovered 50% of the widening. What I mean by that is on January 24th, high yield spreads were 292. They exploded to 530 basis points wide on April 7th, but they touched 409, which is below the 50% retracement. That's a positive development because we are now walking back from a recession risk. If high yield spreads had gone from 500 to 1,000, a recession was guaranteed. But instead, it's reversed almost all the widening back to even levels before April 2nd. On April 22nd, again, happened this week, we had 2 consecutive 90% advancing days. That means that stocks within a couple of days apart had posted 2 days where the advancing gains were 90% or more. And as you can see here, this 3 times since 1979, stocks are higher 3, 6, and 12 months later. And that happened on April 22nd. Now, I covered this last week, but the VIX closed below 31 after going above 50. So the last thing, of course, that would probably convince everybody that the bottom is in is if the stock market recovered 50% of its decline, which is 54.91 on the S&P. So that's the level to watch. The S&P peaked at 61.47 on February 18th. It fell to 48.35 on April 7th. The halfway recovery point is 54.91. And we closed on Thursday at 54.85. So we're 6 points away, 0.1%. So almost there. And of course, that really amplifies and confirms what we've been saying for the past few weeks, that we're still in a bull market. I know it's been horrific and feels terrible. And it was not clear to us if this would be a V-shaped bottom or a range trading bottom like 2011. Now, there are things that can go wrong. I covered this last week. The tariff war with China could turn into a Cold War. Are the shocks going to lead to a global recession? Not yet, but of course they could. Could the financial crisis lead to rapid deleveraging? Could inflation expectations explode? Could S&P estimates fall a lot more than 20%? Maybe. These are the things that people are going to worry about. But we also think stocks got really washed out. And as you know, I've been talking about this with Tesla, that Tesla, we think, got so washed out that they reported terrible earnings on Tuesday after the close this week, and the stock rose and has actually had 2 consecutive gains now, and now solidly trading above its 20-day moving average. That's constructive in my view, and it's a positive surprise. Similarly, Bitcoin's finally catching a bid. Bitcoin fell while gold rose during the February to April period when asset markets were deleveraging. And that's because institutional investors were cutting leverage, and when they're cutting leverage, they're cutting their Bitcoin longs. But in the last couple of days, the opposite's happened. Gold actually has been cooling and Bitcoin's been rising. And I think there's a convergence trade there, and that's a lot of upside for Bitcoin. And that's good news for MicroStrategy, which, as you can see here, did not make a new low on April 8th. It bottomed on March 11th at 231. So again, a lot of important, thematically important stocks have looked like they washed out. In terms of Granny performance, individual stocks by week, the top 5 performers in the past week were Netflix, Palantir, MicroStrategy, Abbott Labs, and Costco. And the bottom 5 contributors were Microsoft, AMD, Amazon, Meta, and Nvidia. In terms of themes, the #1 performer was cybersecurity, really led by Palantir. The second is the style tilt. Again, and that's the benefit of us using style tilt because that changes every quarter, but you can see Netflix, Palantir, MicroStrategy are really driving those upside gains. And seasonality was a drag, and you can see that's really driven by Meta. And easing financial conditions really benefited, again, from Netflix's inclusion as well as Garmin and some others. So just to reiterate, if you're wondering why do we call this granny shots, it's referring to an unconventional way of shooting a basketball free throw, popularized by Rick Barry, who made 90% of his shots. It's underhanded versus most people who shoot overhand.
That's pretty much it for this video. Let's go ahead and take a look at Nvidia here on Unusual Whales. We do have a new price target here as of April 25th by Morgan Stanley with a $160 price target, a buy recommendation as well. Seeing that on Unusual Whales, a lot of firms here are putting Nvidia here as a buy recommendation. And again, these price targets are well above from its current prices here today. So first thing I want to kind of go over is the SPY here, the S&P 500. SPY here currently at 551. We have this pattern here, right? Top, and then here a top, and then a breakout to the top side. You have the bottom here as of April 7th, another bottom touch point here as of April 21st. That's 2 touches points there, and then on top here we have about 3 touch points. Recently here during the last 2 days, including today, we just broke out to the top side, and so I do believe the bottom is over now for the S&P 500. And I think the overall market is going to have a move back up to the top side. At least for SPY, I am going to be looking for this move towards the 200-day moving average. That is going to be a 3.5% move to the top side there. And again, it's going to be right around $570. That is going to be my price target here going into May of 2025. It could definitely occur a lot sooner than expected. And again, keep an eye out for 570 to be tested there. Let's go ahead and take a look at the rest of the Mag 7 here. We have Amazon here looking to also test towards the 200-day moving average. That is a 5% move towards $200. You got Google here, which again, Google here is currently red in the after hours, but overall up about 1.68% on the day. If we do the current price here all the way to the 200-day moving average, again, close to about a 6% move. You got also Microsoft here going back to the 200-day moving average, a 5% move. This is going to be towards 413. Meta here looking for 577. This one here, a 5% move from current prices. Apple here as well at 209, looking for 227. This one here is going to be closer to a 9% move. And then you got Tesla as well. Tesla here actually almost hit our 200-day moving average here. Very, very close. If I zoom in here, there's barely anything left. We're so close to it. It's about 2% move towards the 200-day moving average, and I'm very bullish that Tesla, once it tests the 200-day moving average at 290, expect to see a potential move here towards 313, which again, this one is going to be right around 9% going into May of 2025. Nvidia here has some room for the 200-day moving average. If we measure the current price here at about 110, going up to about the 200-day moving average, that is going to be a 13.5% move towards the top side. And again, current price being 110, looking for 125, 126. That's the 200-day moving average. That's a 13.5% move towards the top side. With that in mind, I do believe what we have here at these current prices, I do think the Mag 7 is going to be a dip opportunity. Personally, as a long-term investor, I really wouldn't mind adding into these positions at the moment. If I have a lot of cash on the side, maybe I'll add small positions at a time and look to see if there's going to be a bigger dip, and then look to get in at a better dip opportunity, right? And again, recently we had this low here for Amazon, 162 to about 180. That was a really, really good dip opportunity, and I don't think we test towards 162 again. If anything, if we get closer to 180 for Amazon, maybe I'll look to add a bigger position. You've got Google here testing between 145 and 160. Again, we got bought back up all the way up to where we are currently. If we drop back down below 160, then I'll look to add a bigger position. But as of right now, I don't mind adding a small position at a time. You got Microsoft here currently at 391. Again, between 405 and 367, I don't mind adding a small position. If for some reason we get closer towards 367 or lower, I'll look to add a bigger position here for Microsoft. Meta here, if we dip down below 490, which we sort of did here just for a short amount of time, hitting a low of 480, I would look to add a bigger position down here. I still think it's a pretty good dip opportunity while we're below 586. Anything below 586 down to about 490, I would look to add into Meta as well. And then you got Apple here hitting below 173 just for a short amount of time. And then here ranging between 173 and 206. I mentioned in our previous videos, between 206 and 173 is a really good dip opportunity here for Apple stock. Tesla here, I have to make some new updates because I've been saying anything below 250 was a big buying opportunity. And now that we are above 250, keep an eye out for 250 to about 272 to be a potential dip opportunity. That's where I would look to add a bigger position at the moment if we dip down below 272 again. As of right now, I think anything between 272 and 313, I wouldn't mind adding a small position. I do think that going into May and potentially June of 2025, we are going to range between 313 and 355 for Tesla stock. As for Nvidia, I've been saying this for months as well. Last couple of weeks, between $117 and $96, that's a dip opportunity for long-term investors. I think that's where I personally would be dollar cost averaging, again, between 117 and 96. If we dip down below 107, I'll look to add a bigger position. This used to be 103. I am now upgrading it in my personal opinion. Anything below 107, I'll look to add a bigger position, and then anything below 117, I don't mind adding small positions at a time. And again, I am looking for all of Mag 7 to be headed up to the top side. As I said on the SPY here, and as Tom Lee also said, look for that move on the S&P 500. If we go ahead and look at SPX, let's go ahead and see there. A move to the top side, what I would keep an eye out for. Again, let's go ahead and just see what Tom Lee said here. Looking for the level Tom Lee was talking about. Right there, I think I just skipped it. 5491. If we go ahead and take a look at the S&P 500 right now, 5491, we're well above 5491. If anything for the S&P 500 right now, what I would be looking for is a test towards this resistance level here at about 5687. We still have about 3% left to get towards that level. And again, 569, where is it there? Let me remove this real quick so it's easier to see. 5696 to be exact is going to be that resistance level to watch out for the S&P 500. We already broke above Tom Lee's prediction here. And again, 5491, we're well above it if we take a look here. Currently at 5525. And so I think the bulls are back. I think we are going to have a rally going into May. And again, today being April 25th, 2025, if we just take a look at next week, I'm pretty sure we're going to see a lot more greener days for the S&P 500. And there should be a really nice rally back up to our all-time high. And again, I'm not saying it's going to happen within 1 or 2 weeks. I think going into the next couple of months here, we are going to see a new all-time high. And I think we are still in a bull market as well. Just agreeing with what Tom Lee has said. Let me know what your thoughts are down below on in the comments about what Tom Lee said or about the overall market. What are your thoughts on the Mag 7, and are you adding into any of these stocks right now? If so, like what's your average for Nvidia, Tesla, Apple, Meta, Microsoft, Google, or Amazon? Are you also taking a look at Palantir or Hood? And again, are you dollar cost averaging into any ETFs? If you don't have a community yet, I highly recommend joining our Discord. It's free to join, link down below in the description. Again, there's over 32,000 people there. We have open discussions on each of the Mag 7 and other stocks as well. If you are looking for live entries and exits on stocks and options from multiple analysts, we do have Patreon as well. It's going to be the second link down below in the description. It's going to be optional, but we do have a 90% off discount as we're celebrating our 5-year anniversary. Thanks for watching, guys, and we'll see you in the next video.